Good afternoon, ladies and gentlemen, and welcome to the OROSUR Mining Investor Q&A session. Throughout today's recorded meeting, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time just using the Q&A tab situated on the right-hand corner of the screen. Please simply type in your questions at any time and press send. Before we begin, we'd like to submit the following poll, and I'm sure the company will be most grateful for your participation. And I'd now like to hand over to Chairman Luis Castro. Good afternoon.
Thanks very much, Mark. Yes, good afternoon, everybody. My name's Luis Castro, Chairman of OROSUR Mining Inc., and also on the screen, Brad George, who is CEO. Thanks for attending, and we hope to be able to answer as many questions as you've got ready for us. The presentation will be in two parts. Brad will make a short presentation, and then we'll do the Q&A. Since our last webinar, which we held at the end of October, quite a lot has happened. We finally completed the acquisition of Minera Monte Águila from Agnico and Newmont, something which took much longer than we had anticipated, but we did get two very good concessions on it, and negotiations took a bit of time, but we did manage to get the project back for no money up front, which is fundamental to us, because the money that we want to put into the ground rather than for anything else. So we managed to get that. The second concession is that we've got total flexibility as to what we do with this, all these licenses that we now have under our control. And so, as you'll see, as Brad goes through the presentation, in Colombia and the project down south, we have quite a few areas of interest, if you like. They may go all the way to deposit, we don't know yet, but we do have flexibility as to what we do with each one of those different areas. So we don't have to necessarily look for a joint venture partner for all of it. We have the ability to do what we want, which with individual parts of that property. And I think that's an important point to make. We may come back to it during Q's and A's. Okay, just wanted to make those 2 points. Within the company, we have obviously got Colombian assets that we're going to major on. We also have a project in Argentina, gold, with traces of silver, we believe, in the southern Argentina, the Santa Cruz province, which is very pro-mining. And we have a small holding in licenses in lithium licenses in Nigeria. Not the best of times of lithium, but our holding costs in Nigeria are very low, and so we're not spending much time on that. And in fact, we're not going to cover it at all in this presentation. So without further ado, Brad, shall I hand over to you if you want to go through the presentation? Take the controls.
Yes, thanks, Louis. Good morning, everyone. I say good morning because it's 1:30 a.m. where I am, so I'm doing my best to stay awake. I won't apologise, but for older holders, some of the presentation might be familiar, but I am going to go back and rehash some of the history, because given the activity on the market in the last couple of weeks, we probably have a lot of new shareholders wondering who the hell OROSUR is and where it's been all their lives. So we'll go back and do a bit of history, but I'm sure the questions will come through. We've all read these, of course. So in summary, we're not a new company. In a past life, the company was called Uruguay Mineral Exploration. It's a Yukon registered company, so it is Canadian, but dominated by the London Exchange by 98% these days. For about 20 years, it ran a gold mine in Uruguay, South America. It produced about 1.5 million ounces. That came to an end in 2017, and the company transitioned from there back into an explorer, while I wrapped up the operations down there over a number of years, largely done now. So as a company, as Louis pointed out, we have two major gold projects, okay, a bit of silver in Argentina, in South America. Probably most importantly, well, very importantly, is that both projects are either owned 100% or we have a pathway to 100%, and I'll explain that later on in the program. That gives us enormous flexibility in one, owning the projects, and two, whether we want to bring in a JV partner, which, as Louis said, we're not in a hurry, but at least owning 100%, you have those options. Equally as importantly, they're both big blocks of land and getting bigger. I mean, I've been exploring for years. You can't explore on a postage stamp. You need, if you're looking particularly from an earlier stages, as much land as you can get. So we've got a big project in Colombia, now much bigger because of the acquisition recently, I'll talk about later on, and a big project of almost 600 square kilometres in Argentina. So we've got big chunks of land. The reason I guess many of you are here is that the recent drilling results from Colombia have been very exciting for a lot of us. I, as always, would caution. Caution. This is good fun, but mineral resources take a while to develop, and let's enjoy the ride. But there's a lot of work to be done. And Argentina is early stage, but looks very exciting geologically. Within geologists are easy to excite. Importantly, we've just got our drilling permits, so we look to start work there in the new year. It's nice to see an upward sloping share graph, which has been a long time coming. So obviously been a very exciting couple of weeks with the latest results coming out. That, I think, importantly for us is that's got us noticed. I don't know the numbers. There's probably close to 2,000 small miners in the world, or small explorers in the world still these days, probably far too many. Very hard to get noticed. And I think those results, given the way the world communicates now with social media, we've jumped out of the pack. That they were very, very stark drill results that got everybody wondering what on earth is this. So got us noticed. The share price reacted, and now suddenly we've lifted ourselves up a level beyond the pack. Cash on hand, clearly that'll be on. I have no doubt will be a question that will be asked. Probably about $500,000. So yes, we're always going to need to raise money. So I'll just flag that now. So why the attention? Well, as was pointed out, we've had the Colombian project, and that is the key driver, since late 2014. So it's actually about 10 years. So it's been 10 years to be an overnight success, if you call it a success. But finally got the project back ourselves, which for most of those years we've been subject to being a passive passenger to major companies, and major companies do things in their own particular way. And again, I'll explain a bit later on. So finally, we're back in the driver's seat. We're not beholden to anybody. We have it 100%. And those drill results, while they always need to be taken in context, are so good that they get everybody excited. So that's really interesting. We have an older prospect at Ansar in Colombia called Aptar, which has seen most of the work over the years, about 38,000 meters of drilling. It's interesting. We've made the point that we're going to move that. Well, we want to examine the process to move that to a resource. We haven't pulled the trigger on that. We never said we would. We've just examined whether it could be moved to a resource, and if so, what the process would be. So that's encouraging. On the same project at Ansar in Colombia, there's what we think and what our previous partners thought was a major porphyry system, El Cedro and El Roblo. Now they're the same thing. They were previously two prospects, but they've been joined together. They'll probably need a new name. We'll get down to there in the new year, but it's we're really sticking with Pepas at the moment. As I noted, the project in Argentina has drill permits now, so we'll get back there and look at the work progress in the new year. So we're at a point where we've got quite a balanced portfolio. We're drilling, getting good results, and other projects in the profile that we look to fund and work on into the new year. So we look to be able to get a couple of cards to our deck. So the Ansar project, as I said, 10 years. So those who are familiar with Colombia, just to the north of us is a project called Buritica, which was owned by a company called Continental Gold and sold to Chinese firm Zijin a few years ago for about $1 billion. Continental used to own the Ansar project, but they couldn't fund them back both, and they spun Ansar out in about 2012, I think. They did some good work, got some good drilling results, and then OROSUR merged or bought them in December 2014. So exactly 10 years. But that was coming to the time when OROSUR's gold mine in Colombia in Uruguay was beginning to get a bit long of the tooth, and there were some issues down there, and there wasn't really enough cash being thrown off by that project to fund exploration. So the project ticked along for a while in a low-key way, and that led eventually to a joint venture being signed with Newmont in September 2018. Newmont had a grand plan to dominate the entire Mid-Cauca belt, the Mid-Cauca belt being the primary gold belt just to the west of Medellin in this region. And they had JVs and ownership stakes in 3 companies up and down that belt. So we signed that JV with them, and they also took a $2 million equity placement in us, and that makes them to this day our largest shareholder. But immediately after that JV was signed, there were some security issues in Colombia that led Newmont to largely withdraw. So they did no work in the first 2 years of that joint venture and paid us the money in lieu they were required to spend. So it sat there for quite a few years. Agnico, which was then about number 7, which now I think is number 3 in the largest gold miners in the world. They then wanted to come to Colombia. They hired most of the executive team from Continental who'd left after the Zijin takeover, and they came to us and came to Newmont, and then they effectively joined Newmont as equal partners and to share the obligation of the JV. So they joined in September 2020. But that, of course, was in the middle of COVID, so that made things rather interesting. We were running the project, our geos were in charge, but using their money. So we kept operating, but we had to stay in a COVID bubble for security reasons. So again, for the next year and a half, work continued, but it was stuck with this very small central area in Aptar and couldn't really get out until late 2021. They moved out, began to find new prospects at Pepas and other places. But that then took us to the end of the first phase of the JV. The JV was in 3 phases. The first phase was 4 years. That came to an end. They then had to move, or at least they had the option to move to phase 2, which is more money, more equity. And that's when they began to, I don't speak on behalf of these 2 big companies, but they began to have second thoughts about Colombia as a destination. Not the project. They love the project, but Colombia was problematic for them, given they'd both since done major mergers with other companies, with Newcrest and Goldcorp and Kirkland Lake. And they had so many projects that they just thought, well, Colombia is at that time politically a bit complicated, particularly with Newmont, and they began to look at ways of moving out. And we began that conversation end of last year, beginning of this year, as to what that departure would look like. As Louis said, it took a lot longer than we thought, and I was a bit naive in thinking it'd be done by April, March. But we got it done in November. No cash up front. We defer consideration to production, so we pay an NSR royalty, and we're back in charge. So it's taken us, as I said, this long to get us back to being in charge, and we began to drill immediately, and obviously the results were quite impressive. The project changes a bit. When we first started, about 200 square kilometres. That over time it reduced, as projects always do, as leases reduce in size, as they get older, or as they become encroached upon. The key driver, it was 20 kilometres of strike of what we thought was the major mineralised trend, the Aragon Fault. Looked interesting. To this point, done about 45,000 metres of drilling. As I said, mostly at Aptar, but lately focusing on Pepas. It's well located, major road running along that river, big tarred road, lots of towns, very nice part of the world. It's about 2 hours drive from Medellin. Excellent camp on site, and most of this project sits within the Ansar municipality, which is very, very mining friendly. So they want us there, but the project is now also increasing in size. Having done the transaction to buy our JV partner, we've also in effect bought their applications. So we're more than double in size now. And here's the map. So on the left is the previous licenses that made up the joint venture. We took a few applications of our own that were not part of the JV, and then we also acquired a large number of applications from MMA. So we're now looking at about 400 square kilometres. This is always, however, I must caveat, subject to change. Applications are not as secure as titles, and they pinch and swell over time as things happen. So I would expect a few of these to drop off, but we're now potentially, I don't know exactly, but we are probably the most substantial and most dominant landowner or landholder in the Mid-Cauca belt. So it gives us a very good position to look at. We haven't been to these places. This covers a very long strike of a very major gold belt. Very little work's been done, so this is something for us to look at in the new year. But certainly it gives us a very nice footprint. The key point of the transaction. So we in effect purchased the JV company. So Agnico and Newmont were operating in Colombia under a company called Minera Monte Aguila. We purchased that company. So all of its assets, all of its data, all of its licenses, we now own. The consideration said no cash up front, so 1.5% NSR royalty on all future production, plus an additional royalty of $75 an ounce on the first 200,000 ounces. So that's a total of $15 million. So that to us we thought was very doable, given a very buoyant gold price, given what we're seeing with potentially quite low cost mining, giving away that level of NSR, which is in effect about 2% NSR, is about industry standard, and we're quite comfortable with that. But importantly, no cash up front. We didn't have any cash, and really, we wanted to defer all consideration until we'd found a mine, permitted a mine, built a mine, and were running a mine. So for us, that was a very good deal. So Pepas, of course, is what got everybody excited. So Pepas is in the north of the project area. It's about 10 kilometres north of the main Aptar camp and the main Aptar deposit. This is an absolutely grassroots discovery, which is quite unusual these days. And to be fair, to give credit, this was found by Agnico. They then lost it again, but this was, when it comes time to fight over who discovered it, it was discovered by Agnico. So just as COVID began to abate, the guys got out of camp and moved north and began to map and sample and do regional bleak sampling. Found some anomalous areas, and importantly found, this is quite remote area, no one lives here, so it's difficult access. Found a small outcrop of very high grade material, about 10 meters long, running between 10 and 70 grams per ton gold. They had some sense of what they thought the regional geology was. They, as this map shows, they thought it was roughly sort of southwest and northeast. We're not so sure now. We had the benefit of hindsight, so we're reassessing these maps. So they drilled their first hole in April 22, PEP 1, to target what they thought was the down dip extension of this outcrop, and somewhat surprisingly, pleasingly surprisingly, hit 150 at 3 grams per ton from surface. Bit of a surprise. And then two further holes from this same drill pad came up with similar numbers, and then one hole collapsed. But this was again when the company, as I said, began to have pressures with politics, and I get the sense, and again I don't know, not being inside the tent, that they were told, look, we don't really want to be in Colombia, give us a reason to stay. And so they sort of stepped back, and understand, of course, that companies of this size need massive projects. They're not here for 1 million ounces. They're here for 10 million ounces. They're here for Boliticas. They said, well, look, if it's not 5, 10 million ounces, we don't want to be here. So they rolled the dice. They stepped back substantial distances and drilled deep holes, sort of Hail Mary holes, and hoped for the best. And those holes mostly missed. So it wasn't bad work. It was just the pressures applied by the realities of being big companies. And then everything wound down. So we had walk-up targets, and that was obviously, again, we recognised this, and that gave us we thought a tremendous, exciting opportunity to walk up as a small company with different size hurdles to do things differently and get immediate success, which is sort of largely what we've done, I guess, as much as luck as design. The key question that I've always talked about is that, and this is not understood well, when you drill the first hole into a new, I won't call ore body yet, but into a new body of mineralization, you get good numbers, but you very rarely get much information about the orientation, unless there's something particular about the rocks that gives you a clue. But generally, the orientation can remain unknown. It can be a million different things. So traditionally, what you would have done in the old textbooks is you would have, the first holes are great. You would then move the rig to a different location, probably the other side, and you would drill into it from the other side, and you'd poke around for a while, and you'd try to find some sort of key feature that you wanted to drill into from different directions that would give you some sense of the orientation. So we've been back to site. We were there substantially before the deal was completed. We took over the project and began to map and sample, and we found a lot more outcrop, a lot more high-grade areas. We found 2 old artisanal tunnels that had been mined and abandoned that we entered, and the previous share partners didn't enter for safety reasons, but we did. And we mapped and sampled those. We saw fresh rock. We saw lots of high grade. And we got a better sense in those tunnels of, because they're fresh rather than being weathered, we could see some of the structures that were still preserved and got a better sense of what was going on. And we saw, well, we got a tunnel here, this tunnel B, which was running, the whole tunnel was running to 10, 20, 50, 80 grams. And there was a 60-meter gap between that and the previous or the first hole. We thought, what's happening in between that? So that was an obvious place to start, just as a whole, to understand whether that first hole, PEP 1, was luck, or whether that whole chunk of rock was mineralized. We positioned our rig just next to that tunnel B, which was high grade, and drilled back toward PEP 1. And of course, that was PEP 12, our first hole, and it came back, little short of spectacular. And that was the hole that made everyone sit up and think, wow, what's going on here? It also gave us information about the orientation, and we begin to think now, and it's becoming more certain, that I guess unfortunately our partners chose exactly the wrong direction to drill. They drilled almost parallel to what we think is the controlling structure. We're seeing a basement fault. So PEP 12 and then subsequent holes hit this reasonably recognizable basement fault, below which we're getting into andesites and basalts, and so no gold. And that's correlatable from hole to hole. And we think this fault runs from the southeast to the northwest. So so that first hole was great numbers wise, but it wasn't particularly effective in terms of orientation. We now think we're getting a better sense of this. We're not done yet. We've still got a few more. We've had obviously 2 more holes that came back even better. I mean, hole PEP 13 was just absolutely ridiculous. I mean, that people just were scratching their eyes saying, have we made a mistake? Those sorts of numbers over those sorts of widths from surface are just really weird. I mean, they're just, I'm getting old and I've never seen anything like this in 40 years of trying. So it's pretty amazing sort of stuff. Now, it doesn't mean that this is any size here yet. Size is the next question. So we're still poking around trying to understand, where the boundaries are, where the main structures are. But while doing that, if we get these kind of numbers, then it keeps everybody on the edge of their seat. So it's quite nice. 15 and 16 are underway, or 15's done, 16's underway, and we'll be closing down for a bit of a Christmas break for about a week. The key point, however, I think, is that we had a small program planned of about 800 meters, over 5 or 6 holes, depending on results. We now really can't afford to stop. This area is secure. We have secured the area. No one lives or works here. We really can't afford to leave it empty. The nature abhors a vacuum. So just in order to keep the area secure and subject to financing, that small drill program is now basically going to become a big drill program. So we'll have Christmas break, 3-4 days, and then just crack on and keep going into January. And this orientation work that we're doing, which is the next few holes, will continue. Probably 16, 17, 18 will just continue. And if they come back with information that we think is helpful, we then begin to just step out and begin to look for ounces. So it's exciting. I don't have any idea yet what the size would be. I'm not getting excited about tens of millions of ounces. What I'm excited about is the economics of these sorts of numbers. Open pit, that thickness, that grade, top of a hill, with a power line literally running over the deposit. The economics of this potentially could be off the chart on the downside in terms of cost per ounce. So it's very, very interesting. This sadly is a PDF presentation that this website uses, so you can't see the video, but we are beginning to get a picture. The issue we face in rugged terrain, I think I made a point on Twitter, is that if you're in a straight or somewhere flat where your rig is truck mounted, you tend to just drill holes in the same direction in parallel lines because you move the rig around. Moving the rig here is hard. So we tend to leave the rig on the one pad for a while and swivel it around in different directions. So okay for the geos who have 3D software, but it does make it a bit difficult to see on a presentation or an RNS announcement. So over time, we'll begin to start developing these sort of pictures because straight sections are not particularly useful. But it just shows, I guess, it's a good indication that top of a hill, top of a ridge, This is a mining engineer's dream. I mean, if it grows to size and it gets some potential, and we have a deposit here, mining top of a hill, the whole hill, strip ratio very low, high grade, moving ore down to a plant. This is everything you could wish for that could reduce your mining cost is essentially here. So it's looking pretty interesting. So Pepas is continuing, as I said, Christmas break, and we're going to just continue, subject to finance, of drilling into the new year. And I would hope that over a matter of months, something will begin to emerge there. It's not going to be fast. So those who think there's going to be a mine here next Tuesday afternoon, you're disappointed. Drilling a resource takes time. So you can't make it go any fast as much as you might wish. We just drill. We have one rig. We might move to two, but beyond that, probably not, because beyond two rigs, it's hard to manage, hard to build pads. It begins to get clumsy and messy, and you need to be very, very much more geared up with people and equipment and space. So maximum two, but we'll look at the new year. But I think next year, if all goes well, it'll just be drill, or drill, baby, drill, as our friend Trump says. So to the south, Aptar, this was the original prospect that was first found in 2012, 38,000 metres of drilling. Very different beast. Everything in this area is either porphyry or epithermal. So we have porphyry sources, and other companies have porphyries. And then above the porphyries, we have what can be a huge variety of epithermal systems, depending on where you are vertically in the system. So this one's a high level, we think, VMS/epithermal system. Has some extremely high grades historically, but then close by there's low grade. So it's quite a complicated ore body in terms of the variability in grade. And that makes it complicated in terms of understanding the tonnages and the ore grade. So we've began to relook at that internally, having taken over control and having got all the data from recent drilling. We have engaged consultants to look at this and say, well, is this able to be moved to a resource? Now, we didn't say what the resource, we didn't want to do a resource, because doing a resource is actually quite a complicated and expensive business. If you need results to come to site, verify QA, QC, it's a 6-month job to move to a resource. We wanted to know the answer before we engage consultants. And the view is that yes, there's probably a resource there. But what it is remains to be seen. The resources are not objective. The resources are, depends on who you ask. And the question comes down to, how do we better understand those high-grade pods, because that's where the answers are going to be. And we think that they probably need a little more, no more drilling probably, but more understanding of the geology, because you're trying to interpolate between holes. So we need to understand what controls those high-grade pods, because that's what's going to really firm up the confidence of those high-grade areas. So we're beginning a process now of re-logging the older core, and we'll bring some consultants to site in the new year to look at that and create a picture of exactly what drives this. The issue we have is that no one actually knows why this thing is here, and that's key. You need to understand what controls mineralization, what controls the high grade, and then to have a reliable geological interpretation that can underpin the resource. If you don't have that, then you can do a resource, but it becomes a very conservative resource. And we said, well, there's no point doing conservative. We think it's better. And we can do a bit of work to increase the size and the grade, then we'll do that. So having Pepas is great. We drill that, and Aptar, we think that, well, we know that there could be a resource there, but we want to make it as big and as good, as high grade as we can, and that requires a bit more interpretation. That'll be a new year thing. And to the south, as I said, there's a large porphyry system, which originally found by Anglo American many years ago as a base metal project. Our partners went back in and mapped and sampled and have found it's a big system, 3 by 3 Ks. It is a classic porphyry system, so we're lower in the system. Lots and lots of smoke. So lots of high grade veins running up to 10 grams, all the right rocks, all the intrusives, lots of alteration, lots of arsenic, lots of sulfides in the area. It looks interesting, but it needs a lot more work. It never been drilled, needs a lot more sampling, and we just don't have the time right now. So it's a very exciting thing to have. But we're a small company. We have only a couple of geos, limited human resources, limited financial resources. So right now we're focusing on Pepas and then Aptar and we'll get down here in the new year when we get a bit of time and a bit of clear air and look at this. Now, how fast do we go? We don't know, and we'd like to be drilling here in next year, but really it depends on Pepas. If Pepas is the one that's scoring the runs, and that's where we focus. So we will get down here when we get a bit of time and better understand this, and this hopefully will develop into a drill target over the course of next year, but we'll see. Moving to Argentina. So El Pantano is far in the south in the Santa Cruz province. Argentina is a federation, so the states control mining. So it's very much state by state as to whether you're welcome or not. The Santa Cruz is ferociously pro-mining, and most of the big gold mines are in Santa Cruz. The biggest being Cerro Negro, which is owned by Newmont, our biggest shareholder, which is, well, they tell me that when it's all done and dusted, it'll be a 20 million ounce at high grade, and will have made a fortune. So, and then immediately north in Chubut province, they hate mining. So again, it's a question of being in the right place. So we're coming to the end of the first 3 years of this JV. It ends actually in February, or on Valentine's Day next year. We did a deal with 2 local geologists. The companies had looked here previously in a very low-key way and they walked away. We did a deal with 2 local geologists. It was a big project at the time, about 600 square kilometres. Now it's about 570 as we reduce. Zero entry cost, very low burn cost. We did a deal that had 1 million over the first 3 years and then 2 million for the following 2 years. Interestingly, and actually very rarely, we have the option to go to 100% on this, which is, I've never seen this before. We asked a question and effectively told to bugger off, and actually we did the deal. So we have the right to own this 100%, which again gives us options. We're looking for a Cerro Negro analog, so that's our target. And the reason we came here is that although no work had been done, it had all the right ingredients geologically on the ground. The beauty of here is it's flat. There's not a blade of grass anywhere. It's just rocks on surface. We're halfway to Antarctica. There's no vegetation, no trees. You can just wander around and see rocks, and we're seeing all the right stuff in what we think is a major system. Different part of the world where we're far east of the Andes now. It's still epithermal, but it's more of a rift related. So this relates to the opening of the Atlantic Ocean back in Jurassic times and created these southeast to northwest rift systems into which fluids flowed and created these sort of flower structure vein systems. The key thing about here is that quite often, in fact, quite commonly, the gold doesn't go to surface. So you can wander around and find quartz veins that are barren of gold. Because as the gold fluids come up the system, they're hot, they want to boil. They can't boil until the pressure of the binding rocks releases. Suddenly they do, and they almost explode, and the gold comes out explosively in these boiling zones, and you get these really big, thick, high-grade intersections. And then the veins carry on, but the gold is gone. So you're looking for things that could be deep, it could be 100 meters down. So mapping on surface is not looking for gold, you're looking for the key signs that this process has gone on. So you're looking for more mobile elements, mercury and arsenic, you're looking for quartz veins, you're looking for evidence of steam vents, of hot springs, and looking for the right structural preparation of the rocks. You've seen the rifting that relates to the opening of the ocean, you've seen the fluids moving, and you've seen that geochemistry. And this is what we see at Pantano. It's a big system. It's a 25-kilometer long rifting system. The geochemistry is exactly what we want to see in terms of the arsenic and the mercury and a bit of trace gold. Quartz veins everywhere. We're seeing all the right silicification. It's never been touched, literally never been touched, never been walked on, never been drilled. So we think it's geologically ferociously exciting, but very early stage. And as we know, the market doesn't like early stage, but having Colombia now going well, I think we have the appetite to move down here. Newmont like the project. They've been there. They have given us assistance. So they're on the sidelines watching. We've been to their project. They've been to ours, and they think it's a great project. Again, there are no JVs. We're doing it alone. We have the money. And with the permits just arrived, we'll get in there in the new year. We may not drill immediately. We may do some geophysics first, but the permits are there, so we can drill where we want to. So we'll look at getting a lot of work done there in the new year before the winter hits. Winters down here are pretty grim, so we want to be out by June, and it gets pretty crazy. So it's an exciting project. We've spent the last 3 years just doing all the preliminary work, mapping, sampling, doing ground magnetic ground surveys. So again, it's ready to go. So I guess the question where we are, we'll rejig these slides as things increase, but clearly PEPAS is what's driven the share price in the last couple of weeks. So that took a long time to get done, a lot longer than we thought for the deal to be done, and that's just how deals work, I'm sorry. But the results we got, I think, justified the delay. I mean, we didn't expect to get results that good. I might pretend that we did, but actually it stunned me. And the market took notice, and that's, as I said, lifted us above the pack, and along way that continued. So that will continue. PEPAS will roll on next year into, if all goes well, resource drilling. The APTA assessment and resource will continue, and that will begin in the new year. El Cid Red Roble, we hope to confirm as a porphyry in the new year, and again, it depends upon priorities of where we direct staff, but we don't have cast of thousands, so we have to really focus on what gives us the biggest bang for our buck. And we begin work in Argentina, and I guess most importantly, by being noticed now, we're not having cash thrown at us, but we are beginning to see, as seen by announcement today, we're now being seen by bigger pots of money, by institutions, both in terms of our size. We're now at 30 million Canadian market cap, which sort of gets that nice spot. And we're now seeing the bigger money beginning to see us and take an interest in the phones. The phones are ringing for chats to say what's going on, who are you? So yeah, look, it's a nice change to be popular for a while. So that's where we are at the moment. I'll leave that there, and we're happy to sit here for a while and take some questions.
That's great. Brad, Louis, thank you very much indeed for updating investors. Ladies and gentlemen, please do continue to submit your questions just using the Q&A tab situated on the right-hand corner of the screen. But just while the guys take a couple of moments to review your questions submitted already, I'd just like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, will be accessible via your Investor Meet Company dashboard. Louis, as you can see, you've had a number of questions from investors throughout your presentation. We did receive a number before today's event, so thank you to everybody for your engagement. If I may just hand back to you to read out those questions, and I'll pick up from you at the end.
I'll give Brad a break, actually. Help us start. I hope it's tea or water that you've got in that flight. We don't know, but there we are. So the first one relates to, in fact, Brad's answered this already, how much money remains in the treasury. We mentioned this already. It's at just over $500,000 at the moment. And clearly now we're getting into a more active phase. There will be at some point a need to replenish that. The good news is that, well, two things. I'd say we have been careful in what we spend and B, what we raise, because the price has been pretty low over the last few months. That's now changed. We're going to be in a better position with a better price, and secondly, getting some interest, not just here in the UK, but also in Canada. We haven't used the Canadian listing to much of an extent, but hopefully we'll be able to make some use of that going forwards. The next question, if OROSUR enters into a joint venture, what's to stop the other company putting ANSAR into care and maintenance, which is what happened last time? Okay. Well, fair point. This was a joint venture agreement that we inherited when we arrived, and so we had to work within the strictures of the JV. And so that did lead to a bit of delay. To be fair, we did have COVID in between as well, so it was difficult to be particularly active outside the APTA region, which is what Brad's already alluded to. And what I would say, just going back to my points right at the beginning of the talk, and that is that it doesn't necessarily, well, we don't necessarily have to go for a joint venture partner right away, and secondly, if we do, it doesn't necessarily have to be over the whole land holding here. We've got at the moment we've got 2 or 3 areas of interest. And there's nothing that might stop us from developing one ourselves, looking for a partner on another, and deciding what we're going to do on the third. So there's quite a lot of optionality here. And going back to the specifics of the question, how are we going to stop it happening again? Well, it's all in the drafting and relative strength on this. And if you're going from a stronger position, then you'll be able to do a slightly better agreement. So we're confident we can minimise the time that's going to be spent.
I could jump in there, Louis, just to make your point. When we did the JV with Newmont originally, we were basically bankrupt. I mean, the company was on its knees. So that gave us limited ability, well, before our time, this was the previous. So there were maybe some things in the JV that we would do differently, but there's no point looking at hindsight. As I said, it was in care and maintenance effectively for the first 2 years because of security issues. Newmont, they did no work, but they paid us money in lieu. And then when we use the word care and maintenance, really that was that limbo time between phase 1 and the beginning of phase 2. And I've explained to many investors that the process of moving from 1 to 2 changed because the tax rules in Colombia changed. So there was a complications imposed upon us. But generally speaking, the JV partner can do what they want. It's their money. But one way around that is, of course, you can say, well, A, you've got to spend X amount of dollars, and B, you have to do a certain amount of work. So you might, for example, say, well, okay, you have to do so many thousand meters of drilling, for example. So that would probably be the mechanism we would use in future to do it. If we did a JV, which I'm not saying we will, I'm not a great rush, to be honest, to confirm that the partner does their work. The big issue we had historically was not care and maintenance, it was force majeure. And what we did do for most of the JV was that we remained in control. We did the work, albeit with their money. And even when Agdico came in and COVID was there, we did the work. So they wouldn't come for safety reasons or health reasons for COVID. So we went and did all the work. If we didn't do that, then they could have called force majeure. So we did what we could to continue to make sure work continued. But yeah, that mechanism of saying of defining certain work programs might be the way you do it. And that, I guess, the next question there is if we did a JV, and JVs, I'm not in great rush, as Louis said, it would depend. If we were to remain in control, would we give over control? As things today, we haven't had any JV chats. Not interested. The phones, we've had a few people saying, what are you going to do? Which is sort of a loose way of saying, do you want to do a deal? Because we're coming into a gold market. There's lots of junior mining companies. What they want is projects. That's the key issue, is that if you don't get a good project, you're not going to raise any money. So they can suddenly see this is a good place to be. We've got a lot of land in a couple of countries. Do we want to do a deal? We can do a deal on one or all. My view is now, Pepas, we'd be nuts to do a JV on that. I mean, that's exactly what a junior company wants. It's cheap to drill, cheap to get to, getting fast results. That's just, really what we would want to be. Exploring a big porphyry, for example, that's a different beast. You look at what collective mining is doing south of us. Those are deep holes, it's rugged country, it's expensive. So a scenario might be is that we do Pepas and we bring a partner in for that. And that's speculative, but we can divide them up. So, but at this stage, Pepas is what's the key. And if we did a JV on that, well, I can't see the sense right now unless it was an amazing JV. But that's just a really nice junior company project.
Let's see what comes up. The next one is the south of Lansar. There was some speculation. South of Lansar was to be drilled by the year end. Obviously, delays cropped up. Is the south still highly on the agenda? And what's a rough time to drill? Well, I think we've covered that in the presentation. I think Brad did a good job on that. To the south means El Cedro and El Roble, the porphyry that we've just discussed. So yeah, it depends on priorities. Right now, it's Pepas, possibly Apta, and then El Cedro or Roble after that. But again, it depends on funding and how things progress on the other two projects. But it's very much still on the agenda. There's plenty of sampling results that we have from there, and we can do a little bit of work there just to perhaps define better the target. But the drilling is likely to be later on next year rather than earlier on. The next one has the phone finally rung off the hook after the high-grade intercepts Pepas has delivered. Well, it's interesting actually, because that just a bit of context to this. At the end of October, there is a mining conference held gold mining conference in Medellin in Colombia, not too far from where our project is based actually. I attended there with Joaquin Sarroca, and we had very interesting conversations then, and that was before we even started to drill Pepas. And the reason for that is that Colombia itself, the general atmosphere, mining environment is improving. When the current president we have now came in some 3 years ago now, mining was looking under threat, I wouldn't say, because Antioquia province has got a great history and it will still carry on, but it was in a more difficult position. The president hasn't been able to pass a lot of the stuff that he did want to pass. Congress has been digging in its heels. And so the political situation is changing, and more companies are coming into the country. And we've got some sizable guys coming up and wanting to have discussions because we do have the land holdings. And we worked hard at that. We've got a very good community team doing what they needed to do, even through COVID. And whilst Agnico and Newmont were there, they also invested on the community stuff. And it's important to have the social license. So yes, there are discussions going on, but as Brad says, we're not in a particular hurry to do a deal right now, and let's see how things develop over the next few months. Next one, probably for you, Brad. Can you see this one? Much of the drilling at Pepas has been north and west of PEP 1. I note that the map, shows a river some distance to the east. How far is PEP 1 from the eastern boundary?
The big river to the east is the Cauca River, which is what the name of the whole region comes from. It runs hundreds of kilometres from south to north. So it's a mid-Cauca belt. There is a Cauca state further south of us. That's the really big crustal scale structure that controls everything. Not in and of itself attractive. It's just a big thing that then feeds off. So that's quite a few kilometres to the east. We can't work. We don't want to work down there. It's not prospective. And two, most of that area is blocked off. So on either side of the Cauca River, there are these forest reserves, these dry tropical forests. So we don't work down there. We're up in the hill. So the Cauca fault, or the Cauca is a major crustal scale thing, but it's not in of itself attractive at the prospect or deposit scale. So we'll go as far east as we need to. We sort of made the point, and this goes back to Louis' comment about we work down south. We're a tiny company. We've got a couple of bucks in the bank. We've got a couple of geologists. We can't do everything at once. We've got to, we have to be very careful about how we apply our time and our money and our people to get back, one, to get some good results, to give us confidence, to raise money, and to get the market to notice us again. We've had a very long period of just being ignored. So we're focusing on that which gives us the biggest bang, which is Pepas, top of the hill. Pepas is easy to get to. It's a half an hour drive from the main road, top of a hill. It's really nice. We're starting in the middle. So the holes we've drilled so far are just sticking in that core, understanding what we think controls that, and we'll just step out in very small steps. We're not going to go galloping off to the east or to the west or the north, trying new things. That's all very exciting, and there's lots of smoke. We're seeing anomalies all over the place that we'd love to go and drill, but you just got to restrain yourself and say, look, that's not going to go anywhere. It'll be there tomorrow. Just get this thing moving to the point where it becomes self-sustaining, and we can begin to expand our resources. It's to do what Agnico and Newmont did. They had, I lost track, 160 people in our camp, cast of thousands. We can't do that. We don't want to do that. So all of these things we have to do in a very logical sequence, in a way that a small company can afford and can manage with our current resources and our current management bandwidth. So the east of the river is, the Cauca River is a long way off, so I wouldn't worry about that.
Next one. With the Ansa project now fully owned, how does this consolidation change the company's ability to raise capital or attract strategic partners? Well, I think I've probably covered that already, actually, with my last answer. But yeah, the reality is that now we've got 100%. It gives us a lot of optionality, and there are people calling, and one day we ourselves may even approach you if we think we want to go and find a partner.
It gives us an easier way to be valued. This was always the argument about Ansa. If MMA had elected not to move to phase 2, then the old JV had a facility that said, okay, if that happens, then they'd earn 51%. They would then fall back to 49. We would assume majority control, and then we can then take over control and spend our own money. And if they didn't contribute, they would dilute away over some period of time. But an unknown period of time, it's taken years to dilute them away. And they could have always said, oh, we'll come back in now after the risk had been done. So you had no idea of knowing what our ultimate equity position would be. We could have been 51 or 90. So how do you value a company? We actually don't know what they've got or what they can get in future. We say, well, just give the whole thing back, 100%. It's easier for us, easier for you. You don't want to be there. We do want to be there. And having 100% yes, people just know what you are and can put you in a nice little box. So, right, that's what it is. We know what the payments you're going to make are in 5-10 years' time. That's all known. People love known things. They hate uncertainty. So just having nice round numbers, known numbers, just makes life easier for all the little bean counters and analysts who are running numbers over us now and saying, well, it's just there's enough uncertainty in geology. So having certainty in equity just removes one big unknown.
Next question. How does the grade and scale at Anzá compare to other similar gold exploration projects in Colombia or Latin America? Yeah.
Well, I can't comment on scale yet. Scale is a big question, I suppose. The grade is up there. It's very much, and I'll be honest, I have no idea what Pepas is. I haven't, the question of how it got there, why it's there, what it is. This is a question for next year when we've got a bit of time. At the moment, we're just drilling, and it's just so fast that we haven't time to scratch ourselves. The question of its genesis is something for mining conferences in 5 years' time.
Yeah.
But what we do know, as I said, the whole region is essentially you have a big porphyry comes in from below, fluids come up from the porphyry, and above that you have this huge variety of epithermal systems, and there can be 1,000 different styles depending on where you are vertically and laterally, and they interact with the host rocks, with the surface water, and all kinds of things happen, and you get this massive variety in width and size and grade and so on. The porphyries themselves tend to be low grade. They're big but low grade. So if you look at the Buritica, I look at the collective minings, they're always normally going to be sub 1 gram, but they're big. So they're going to be 0.6, 0.7, 0.8 grams, maybe some credits of metals and silver, but they're low grade. Lots of ounces, but the issue with those is that they're big buggers. To build, you might have 10, 20, 30 million ounces, but you're going to need $2 billion to build that. It'll be 10 years, and it's a massive footprint and a massive waste disposal issue, and they're hard work. Above that, you get the veins, and where you are matters. So Buritica to the north of us, they're kind of in the middle. They have what we refer to as carbonate base metal veins, or sheeted veins. They're a sweet spot. They're thick and they're very high grade. So Buritica is an underground mine, but it's base grade's about 10 grams, so really attractive. What we've got is a bit lower grade, but at surface, and that's different. That's different for a different reason. So that's mining economics. Scale, I don't know. That's, I said, the question. Yeah. But 70 meters at 7 grams at surface, open pit mining is, it's hard to calculate what that's going to cost, but the beauty is it's very, very cheap. Louis grimacing, I'm going to mention numbers. I won't mention numbers, but it's very fast. It's very fast. It's very cheap and very fast on different fronts. So it's very fast, cheap to explore. The holes are short, the holes are fast. They're all mineralized. So bang, 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 bang. We're not drilling these deep holes that take months to drill and cost $1 squillion. They're just bang, bang, bang. They're very fast. So that's cheap. That's good. If we ever build a mine there, to be if, but if there was a mine there, then of course having higher grade means you're going to get the same amount of gold from less tons. The less tons means a smaller plant. So a smaller plant, the average global open pit gold mining grade now is about 1 gram. So let's say we're 5 grams. So your plant is 1/5 the size. You're moving 1/5 the amount of dirt, so you need less trucks. Everything's just less. So it becomes a much, much cheaper thing to drill, a much, much cheaper thing to build, and a much faster thing to build, which again all feeds back to the kind of thing that a junior mining company likes. Do I want $1 billion plant? Yeah, nice, but I'd be dead by then. So I'm more focused on the thickness and the grade rather than the scale. We don't need a lot of scale here. If we can get this to 1 million, 2 million ounces at this kind of grade, that just makes a lot of money. So we're not getting ahead of ourselves, but it's a pretty good start.
It's early days, very early days at the moment. We don't know the scale, and we've got some great results, but we need a lot more drilling yet before we get any confidence levels there. But yeah, it's attractive, no question, it's attractive, but we don't quite know yet where we are compared to others. The next one, the next two more about capital raising, which I've already talked about. The next one is, would you be able to talk about whole PEP 11? 11. This must have been under Agnico, I guess, right? 11.
Yes, that was their last hole. I can't talk about specific holes just yet because we're still doing our own picture. They drilled holes. They moved off to the west. They drilled holes in certain directions. It was all over the place. So that hole 11 was drilled quite deep, quite a long way down. Hang on. I think we bumped off.
Brad, you've cut off at the moment.
Sorry, Brad, we're just losing the connection. I'll just take your camera down just momentarily to see if that can support the bandwidth. So can you hear us okay, Brad?
I can hear you. Can you hear me?
Yeah, the connection has dropped a little bit. Do go ahead, sir.
Right. I'll keep talking. You can't get to see my face, which is probably a positive. Look, hole 11 and hole 8, they are the nearest ones. And at some point, we'll begin to explain how they work in. But no, they haven't closed things off. But I really can't be talking about the boundaries yet because I just don't know.
Yeah. Okay. The next one, are you employing? I can do this one. Are you employing security personnel on the site at Pepas, or is this unnecessary? We do have some very limited security personnel. It's in a remote spot. There's no need for security personnel as we probably all think about them. I mean. So, frankly, at the moment, we're in a fairly good location. If we do need, there's plenty of people around. If we do need some help, we also rely on the community to let us know if things are happening in the local area. We've got very good connections there. So the simple answer is right now we don't need the sort of security personnel that one would think of in the usual way. The next one: do you have any idea of the size of a potential resource at APTA? Based on the current drill data. Again, it's something which we're looking at the moment, employing consultants to come in and have a look at. Likely that we don't need to drill anymore, we need to get a better idea of the geological model that we're going to be running with for the interpretation, as Brad said earlier on. So right now, it's not something that we want to be doing overnight, but it's something that we want to get to probably the next 3 to 4 months. Let's see what we hear back from the consultants in the new year.
I'll expand there, Louis. I mean, the short answer is yes, but I'm not going to tell you what it is. And we, as I said, making a resource compliant to 4101, it's a big job. It ends up being about a 100-page document. It's going to cost several tens of thousands of dollars. You don't do that until you know what the answer is in advance. So we've done our own numbers, and yes, we know what it is. We think there's more there. We think. Again, this is maybe being a bit optimistic from a geological point of view, that it again wasn't drilled well, and this goes back to the previous owners, Waymar, who, throwing him under the bus, we think were just drilling holes in the one place to get sexy results and not geology. We didn't actually do much of our own work. We did a couple of holes between the JV that ran out of money. And again, Agnico and Newmont were looking for big things. So they were drilling a lot of deep holes that were slightly optimistic, or again, trying to find things and just hoping for the best. So we think that, again, a smaller company coming back in and doing it, I won't say properly, but doing it properly, that can be substantially increased, both internally in terms of better understanding these high-grade areas. And we're beginning to think that, well, he's having a chat with a few friends, we think APTA might be a slightly distal part of something bigger, distal being a bit further away. So we think that there might be an interesting source to the south and to the east that we haven't yet explored. Just seeing the way that the trend and the dip of this thing changes and the metallurgy changes, we think it might be the limb of something bigger. So we think there is a resource there. We should have our own number, but we think we can improve it. So with just a bit of cheap work, and it's as much logistics. So what I'm trying to do is bringing people to Colombia to do this sort of work. It's expensive, airfares and mucking about. So I don't want to have guys come down twice. So we want to have consultants come and look at relog core. They've got to come and, the guy who signs the resource has to come and view what we do and sign off on our procedures and processes. I want to double up. And if they're going to come down, and let's have them come for APTA and PEPAS. I'm not saying PEPAS is going to be a resource, but we can actually get all that compliance stuff and all that QAQC stuff done at the beginning rather than the end. So if I'm going to get a guy to come, or two guys to come down at substantial cost, I want to maximize what we get out of them. So they'll be doing, moving APTA forward and also basically giving us the compliance tick at PEPAS as well, so that can move forward faster. So it's just a question of being efficient and not blowing shekels on first class airfares and everything else, because these people aren't cheap. They're very good, but you pay for them. So we'll look at that in the new year and just get the maximum bang for a buck.
Good stuff. Well, listen, we're nearly coming up to the end of the hour. There's one more question here, which is very easy to answer. How many warrants have been cashed to date? And the answer is that solely the ones that we announced the other day. There may well be more if the price holds where it is now. So we will let you know and announce that as soon as that happens.
That's great. Brad, Louis, thank you very much indeed. You have, in fact, taken all the questions from investors, and thank you, Brad. Appreciate it's 2 a.m. in the morning with you. Louis, I know that feedback is particularly important to you and to Brad, and I'll shortly redirect those on the call to give you their thoughts and their expectations. But before doing so, Louis, if I may just ask you for a couple of closing comments.
Well, yes, 2 comments. Thank you very much, everybody, for attending. We've had some very big numbers coming onto this call, the biggest we've had to date, and not surprising, I guess, given the exciting results we've had. Those hopefully will continue. There will be some which aren't going to be quite as exciting. That's just the way it is in exploration drilling. But we're very confident we've got a very nice project here, and not just one, but perhaps a number of them, as I mentioned to you right at the outset. And the only other thing to say is, everybody have a good Christmas, and let's come back with a bit of energy for the new year. So that's about it from me. Thank you very much.
That's great, Louis. Brad, thank you once again. Can I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. So take a few moments to complete, but I'm sure it'll be greatly valued by the company. On behalf of the management team of OROSUR Mining, we'd like to thank you for attending today's presentation. Good afternoon to you all, and good morning to you, Brad. Thank you.
Thank you very much, Mark. Thanks, everybody.